All right, believe it or not, a new home loan program through Bank of America is now allowing borrowers to purchase homes again in select cities for as little as 0% down with no closing costs, no minimum credit score, and the offer really does sound too good to be true. It sounds a lot like 2006. So in today's episode, what I want to do is dig into this mortgage product to see whether or not it's a good debt weapon or resource for those who qualify, or potentially a risky resource given the market conditions right now and moving forward. So make sure you stick around for today's video. So you heard that right, guys. Bank of America is now offering a mortgage product that has no minimum credit score requirements, no mortgage insurance, and as little as 0% down. Now, per Bank of America, this new loan will make homeownership more affordable for borrowers living in minority communities. This new mortgage product is for first-time home buyers only, and it's being offered in an effort to address the racial homeownership gap. According to the National Association of Realtors, there's a homeownership gap between white and black Americans that's almost 30 percentage points, while the gap between white and Hispanic buyers is almost 20 percentage points. So the competitive real estate market and high mortgage rates continue to affect this even further. And AJ Barkley, who's the head of neighborhood and community lending at Bank of America, said in a recent statement that homeownership strengthens our communities. It can help individuals and families build wealth over time. Our community affordable loan solution will help make the dream sustained homeownership attainable for more Black and Hispanic families, and it's part of our broader commitment to the communities that we serve. The community affordable loan solution is set to begin in markets where Black and Latino neighborhoods are overwhelmingly concentrated, including Charlotte, Dallas, Miami, Detroit, Los Angeles, and it really could later expand to additional cities as well. While the program focus is getting Black and Latino borrowers closer to homeownership, people of all races may be eligible, with eligibility being based on income and property location. The program does not have a minimum credit score requirement, which is unique, but is instead considering other factors to qualify, like prompt payment of rent or utilities, maybe telephone, car insurance, etc. They are requiring prospective buyers to take homebuyers certification courses. They are provided by select housing council partners from Bank of America and HUD, which is the Housing and Urban Development. We're gonna go ahead and leave a link for that in the description just to make it easy for you guys to find if you wanna learn more about this. But the question is the new zero down mortgage from Bank of America a good deal for those people who do qualify? Well, buying a house is an infamously expensive process, more so than people really expect. And it's become a lot more expensive over the years with rising real estate values along with interest rates. The current average home price in the US is now $428,700 when factoring in modest 5% down payments, loan origination fees that can cost as much as 1% of home values, along with closing costs that can run as much as 6% of a loan's value. Buyers could pay nearly $51,500 up front on a $428,700 home. That is not even counting other fees such as underwriting, title, home inspection, appraisal fees. Offering a loan that does not require down payment, mortgage insurance, or closing costs can certainly reduce the barriers of entry for home ownership, no question about it. When you spend less on a down payment and closing costs, you obviously may have more money left over in savings to cover major expenses that can come up that need to be taken care of, or emergency expenses that may happen after you move in. But be aware that making no down payment means that your home loan will cover the full cost of the property, and your monthly payments are then going to be higher each and every month, cutting into your cash flow than if you had money that you could pay up front in order to dig into that monthly expense. Now, fortunately, it doesn't appear that this program comes with an adjustable rate, so there isn't that whole aspect to worry about where it could fluctuate later down the road. As we all remember, much of the crisis in 2008 came as a result of the adjustable rate mortgages, or what they call ARMs. And that gets folks into homes that they could only afford when the rate was low, but they really couldn't afford it once the rate went from low interest rates and started ballooning beyond their reach, or even a balloon payment where it's all due at a certain date. So it's crucial to really enter into a mortgage that you can afford, especially when the market is tipping in the direction that it is right now. For those getting into homes through this program, dramatic decreases in home prices really could force them deep underwater since so little equity was established when the home was purchased unless you got into a good deal on the front end, which is happening less and less. Could a program like this, though well-intentioned, result in many losing their homes over time? It's really tough to say for sure, but given what we do know in the past and what we know about the current signs we're seeing ahead, loans like this do look increasingly risky right now. What do you guys think? Would you apply for this loan program if you did qualify for it? Do you think these types of programs do more harm than good? Let us know in the comments section below. Would love to hear your thoughts about that. Thank you, as always, for watching today's video and for subscribing to the channel. Make sure you share the video. Drop a thumbs up for us. It helps us a lot in the algorithm. Until we see you on the next one, make it a great day and keep on cash flowing. See you soon.